Hi, everyone, and welcome to Legal Management Talk, where we're covering every angle of legal management. And our angle today is going to be firm profitability. And our guest is MC Laubscher. He is the founder of Producers Wealth, and he also hosts the podcast Cashflow Ninja. So you can imagine that he knows a lot about this subject. Thanks for being here, MC. Great to see you.
Thank you so much for having me. I've been looking forward to a conversation.
Yeah, me too. A little over a year ago, we had a podcast that was titled Recession Proofing Your Firm. And I think even though that was 3 years on from the start of the pandemic, there was still a lot of fears about, the global economy can be in a recession, any point, and, we have to be prepared for that. And now, a year later, I feel like, I'm no economist, so take my words with a grain of salt, but we haven't really kind of seen those fears come about. And, the economic numbers lately have been pretty good. So I guess we'll start with what is kind of the sentiment on the ground among businesses about, where their priorities lie in assessing kind of the overall economic situation.
Yeah, that's a great question. I think to get to the heart of it, a lot of people have seen some of the economic numbers and they don't look too bad. But the reality is that everybody else on the street, as I would say, business owners, they see a completely different world, which is projected through the numbers. And that
Hmm.
then turns into the psychology of a marketplace, which consists out of individuals, business owners, and our for the basis of our conversation. And the psychology is still the same, that there's a lot of uncertainty. There's a lot of still fear a little bit. When things are uncertain and the future is uncertain, that does strange things to human beings. We're strange creatures, right? So
Right.
we like predictability, we like certainty, and we like to run our businesses based on a future that looks better tomorrow than it is today. So I would say, kind of boots on the ground, talking to a ton of business owners, being a business owner myself, seeing what's going on just in the economy and in our world of small businesses. Yeah, there's still a lot of uncertainty and a lot of fear that, at some stage we're going to have an economy that slows down significantly and we're going to head into a recession. If you think about it, since the great financial crisis in 2008, 2009, and I would make the argument that we probably hit rock bottom around 2011, 2012. That's kind
Hmm.
of when markets bottomed up. We've had one heck of a run since then, until I would argue Q3, Q4 of 2022. Yes, we did get $4 trillion pumped into the economy in March of 2020, which helped, extended the run in my viewpoint. But markets don't go up in a straight line, right? So at
Right.
some stage, there's a little bit of a slowdown and then there's a correction. And, that provides a lot of other different opportunities that didn't exist before. So I see it cyclical, but to summarize, my viewpoint is kind of things are very uncertain. Things are slowing down on Main Street for a lot of businesses.
So then how, as, either a business owner or as somebody who, is in charge of the financials for a business, how do you kind of create a sense of certainty if that's even possible?
Yeah, so for business owners, the things that provide certainty is reserves, cash reserves, and also preparing for any outcome, right? And usually cash can fix a lot of different outcomes when you have access to it. One of the biggest challenges that businesses have consistently, regardless of what business you're in, is access to capital. Number one, for cash flow management. And then number two, for expansion, maybe incorporating new technologies like AI, hiring new employees or other aid players in their firm. So let's talk about cash flow management for a second. I've shared with many different audiences that there's essentially four seasons of cash flow in any business. Most people think of cash flow as money, profits, but that's not necessarily true. Also, sales, right? We've always heard, well, more clients and more sales will fix all problems. It doesn't. Sometimes a business can go out of business of being too successful. If you have a physical product and you sell too many of them too quickly, you can actually go out of business because of lack of cash and lack of cash flow management. So in the four seasons of business, I share that every single business, regardless of what type of business you're in, has four seasons of cash flow. The summer cash flow season is your highest revenue months. That is the months that your business is just going gangbusters and crushing it, and there's a lot of revenue coming in. Now, if you're listening to this and you are managing a firm, you will automatically know which month it is. For my business, one of my businesses produces wealth. It's May, every single year. That is our summer, our peak of our summer. Now, the opposite of summer is winter. Now, winter being the slowest revenue month for your business. So the complete opposite of your summer cash flow month is your winter cash flow month. So highest in the summer, lowest in the winter. Now, you might have fixed expenses throughout the year that doesn't change, right? Your operating expenses doesn't change. Some of it varies a little bit, but for the most part, it doesn't. Now, in the summer, you don't have a problem paying those expenses and managing cash flow and, paying rent from the property that you're operating from and paying payroll and so forth. Well, in winter, it's a little bit different when you don't have the same amount of money coming into the business. And I would just give you an overview of the full one. So I've mentioned summer, highest revenue month. Summer is usually then, after summer, it peaks, it starts to slow down, and you go into fall, the slower season. Still some activity, but things are getting slower. And then you go into winter, the slowest months, lowest revenue months. Well, the winter, what happens usually towards, I would say, the end of winter is that there's a lot of different marketing campaigns that businesses implement and execute, right? You need money for that too, because those new campaigns or new products and services that you're bringing in, that usually gets you to your summer months, which will be your peak revenue generating months again. You need money in all four different seasons. And in some seasons, you just have to cover the bases, your fixed expenses, and then some other ongoing expenses. And other, you need some capital investment. Like I mentioned, fall, winter, need to pay all of the fixed expenses. Spring, you need money to bring in AI, hire new employees, launch a new marketing campaign, and so forth. So having access to cash at 12 months of the year through all of these seasons becomes very, very important for cash flow management. And then the second piece that I shared is you're always going to need access to financing or capital to expand, to bring on more A players, to grow your practice and your firm. And the question just becomes, where do you access it and where do you get it? But one of the things that folks can do during those months is, I would say, that cash reserves, cash is king. I mean, there's a reason there's a saying, all right?
Yeah.
So you want to have, I usually would say 6 months of minimum cash reserves. We're now telling people 12 months. Have 12 months of cash reserves somewhere with guaranteed access that you can access it to then use it to put it in your business and manage cash flow, and then of course grow the business.
Yeah. And then just to dive a bit deeper on the four seasons, and just because I'm curious, why does it follow that kind of cycle? I assume that goes back to the psychology point that you were talking about earlier.
Yeah, every business is different, right? And
Mm-hmm.
sometimes the busy seasons of one business is completely opposite of another business. And it's just because of the busy seasons that they have. So, if you're running an ice cream stand, your busiest month is going to be in the summer, the
Right.
right smack in the middle of summer. And if you've got an ice cream stand on the beach, that's that's going to be your busiest month.
Mm-hmm.
On the other side, when you are selling hot chocolate somewhere, that your busiest month's probably going to be in the winter. So every single business and vertical in business has a different season. And it depends on a ton of factors. I just gave you an example, and that's purely weather based. Then it could be behavior based too. If you think about when the major holidays are, there's usually a slowdown during major holidays. And, in not just in the West or in the Northern Hemisphere, but I would say even in the Southern Hemisphere too, summers are big holidays, right? Summer holidays so there's a lot of businesses, including my own, where summer is completely dead for us. So my slowest revenue month, for example, with Producers Wealth is in August. And that's also because it's towards the end of summer leading into like Labor Day weekend, which was when most people take their vacations. So
Right.
I would say, yes, it has seasonality to the actual seasons. Some businesses depend on that, but then others also depend on behavior patterns of the population.
Yeah, and then, as you mentioned, making sure you have, 6 months of reserves. And, as a law firm, and you're having to make all these different investments year round, especially with technology, and as you're trying to hire the best people in a tight market, you're doling out some more funds. So what's the best way to make sure that you have those funds on hand for whatever you might need them for?
Yeah, so there's a couple of things that you can do, right? So law firms they can go and set up lines of credits with banks. Banks is a great way to set up a line of credit. And of course, they can hold cash reserves in certain products that banks have. Now, again, I look at banks as there's a lot of volatility coming in the banking sector. We had several banks go under in the past 12 to 18 months, seven to be exact. We have had 10 been downgraded by ratings agencies. 11 has been put on watch lists. So banks, again, not a sure thing. Most people look at it as a sure thing. And fun fact, by the way, the FDIC, which insures deposits in the United
Hmm.
States, and again, not all accounts are insured, by the way, by FDIC. Check with your bank. That's a pro tip right there. A lot of our business clients find out that some of the accounts that their money are in is not FDIC insured. So you want to ask your banker that question. The second thing is that the FDIC only has 2% of the funds of the total amount of deposits that they have insured. That doesn't give me a warm and fuzzy feeling. So,
Right.
but everybody should have some money in the bank for operating expenses, and they should have a line of credit. Another avenue that folks have used is bonds. Bonds is a risk-free asset, I was told in business school, right? Especially US Treasuries. But again, there's no such thing as risk-free. Every single financial product or vehicle has some element of risk. There's no such thing as no risk. It doesn't exist. So the reason why banks are actually in a lot of trouble is because of what has happened in the bond market. So interest rates have spiked sharply up. And that has reduced the value of bonds, which is on the books of banks. So that's why banks like Signature Bank, Silicon Valley Bank, they went under. So bonds have also a lot of risk to it. The issuer of the bond, counterparty risk. Most institutions, governments, they're bankrupt. So whether it's federal, state, local, municipal, you really have to look into their financial statements, because that's the party that's supposed to make good on the promises. So we have also used a lot of our businesses owners have used mutual life insurance carriers. Now I say mutual life insurance carriers, it's not just any life insurance carrier. These mutual life insurance carriers are not listed on the stock exchanges. They play by a different set of rules where their priority is their owners, which are their policyholders. So there's specialized life insurance policies that can be set up with mutual life insurance carriers where you can put money in, where the money is guaranteed. It's guaranteed to grow tax-free. You can access the money tax-free. It also receives dividends that are tax-free. And it has a death benefit in there too. If you are an owner of a firm or a senior partner or involved in this is something that could be looked at. It's also a very good way to retain partners and key employees that you don't want to lose. There's a lot of different strategies with regards to life insurance that you could utilize that way. But for this specific question of where to put some extra capital, that's a great place to put capital because you will have guaranteed access to that capital through a line of credit. So make sure that you have some money in the bank. Make sure you set up lines of credit with bank, but also have a plan B. And for most people, plan B is something like this, where you know you'll always have access to capital, even if there's a little, if even if there's some crisis in the banking sector. I'll use this example just so that folks are aware of where I'm coming from. In 2008, 2009, a lot of business owners had lines of credits with banks. Well, what did they do? Well, they closed the line of credits, and they also closed home equity line of credits. Maybe people can relate to that too in 2008, 2009, because there was a crisis in the banking sector, as well as with the mortgage companies and also the financial markets and the housing market. It was a party. There was a
Mm-hmm.
crisis everywhere. So in a scenario like that, what happened, and I lived through this and personally had lines of credit pulled on me as a business owner or investor during that time, could access capital in life insurance policies because they have a guaranteed access, especially mutual life insurance carriers, because they were not involved in that circus. Now, if it was a stock life insurance carrier like an AIG, not to pick on them, that would have been a different discussion. But that's why you want to be with mutuals. So when it comes to cash flow management, make sure you always have options. You have a plan A, you have a plan B, and then also, yeah, you have enough reserves that you have guaranteed access to so that you can manage your firm and your business properly.
Yeah. And it's just like the kind of the golden rule that you always hear about investing is diversify, diversify, diversify. And so same kind of thing as a business.
You absolutely have to, yeah, diversify, because if something happens, then you have other options. Look, you never want to be in a situation as a business owner when you don't have options. And you're beholden then to go out somewhere to another financial institution and get a loan at not very favorable rates just to sustain your firm. So if you plan accordingly, you have cash reserves, like I said, minimum 6 months, at least 12 months at this point. You have diversified line of credits with a bank, with a life insurance company, and so forth. You're just going to be in a much better position that in a event of a crisis, you'll have access to capital. The other thing that I would also say is that, and even if nothing happens, you should still have all those things. A big part of being a business owner is risk management in your business and making sure variables that are uncontrollable cannot come and hurt you and your business and your employees. So that's where I'm coming from, is making sure that you have options, no matter what the environment.
Yeah. And obviously we won't get into politics, but the current event situation as we take this is, an election coming up that will undoubtedly have an impact on, probably the markets immediately and the policies that are going to start coming next year. So yeah, you got to kind of safeguard between both ends, and because you never know what's going to happen.
Yeah, think about it this way. We're in a very politically fractured society. And it's interesting coming from South Africa. I've never seen anything like this. But I was a young man living in South Africa and saw, back in the early 90s, a fractured political society. I
Hmm.
never thought I would see something similar again. Now, what does that have to do with planning and business planning and contingency and so forth? You have to be prepared for anything and everything. And of course, during times like this, where there's a lot of current events that could produce some crazy black swans and wild cards, you want to prepare for anything and everything. So you don't want to put yourself, your family, and especially your business and your firm in any situation where you're kind of stuck and you don't have options. So always have more options available than less options.
Yeah, for sure. So yeah, I mean, I think it's as we kind of still wade through the waters of uncertainty, there's always going to be questions about what what are the best ways to get through this? And are there any other like creative ways that you've seen firms kind of making sure that they stay strong in the event of a crisis?
I think the big thing is going to be access to cash. And by the way, that also gives me peace of mind for my own businesses.
Right.
Every single time in my own business where we're lower on cash when we have, invested in the business, because that's where your best and biggest return will always be. Every single time we've done that, you're kind of a little nervous, right? But when you have sufficient cash reserves and backup, then that produces a lot of confidence. So it's going to help you, like I said, manage and grow, but also in times of crisis, there are going to be incredible opportunities. And how those opportunities will pass you by is not having access to cash. I'll give you an example. So, when the events of March 2020 happened and the world kind of started to lock down, right? Again, uncertainty. Nobody knew what tomorrow was going to bring. And just think back, if you're listening to this, think back during those days. This is before the PPP loans and the bailouts and all of these bills were signed that provided all of this liquidity. Before all of that, nobody knew what was happening or what was
Mm.
going on. You're like, are we still going to be in business like next week? That was kind
Yeah.
of the conversations I was having. And during that time, if you had access to cash, which a lot of business owners in my network did, they started to make aggressive moves. One example that comes to mind is if you're targeting, let's just say, through your firm, clients or just you're a B2C kind of firm, right? Not a B2B. There was a business owner that ran, and he has a coaching program, but he ran like $100,000 of ads, which generated at that stage for him, over $1.25 million in revenue during that crazy time. Um, and how was he so successful? People look at that metrics and they go, that's almost impossible. Well, everyone else stopped running ads. If you
Yeah.
think about it, if you had a business, everybody said, that's it. We're stopping all marketing activities. We're not spending any money. We're shutting everything down until we could figure out what's going on and what's going to happen tomorrow or next week, right? Well, that was an opportunity. So he did incredible things during that. It was kind of like 3 to 5 days, I believe, if my memory serves me correct, where there was this crazy uncertainty. But anyway, yeah, he was able to capitalize on opportunities. So that's when you can get really creative and see what opportunities there are for you. And then, of course, in a downturn, a significant downturn, what happens? A lot of people lay off people. A lot of people lay off A players, believe it or not. So you're going to have access to incredible talent of people that you can hire. And of course, you need money for that. So you're going to be able to position for that too. So that is going to serve you very, very well, regardless of the environment which you're headed into.
Yeah. No, covered is a great example of how you had to get creative to, keep trying to drum up business. So, yeah, hopefully we don't see anything like that again, but you got to be prepared.
For anything and everything. And again, with every crisis comes opportunity. So the first thing is, to be prepared for any kind of shock, and then you capitalize on it. So that's where cash kind of comes in, and where you warehouse it and have access to it becomes a pretty big important factor of how you weather the storm and then also capitalize on opportunities.
Yeah, exactly. Thank you so much, MC, for coming on and sharing your expertise. And yeah, hopefully everybody can take a lesson and make sure that they are prepared for every eventuality. So I really appreciate it.
Absolutely. Thank you so much for having me on.
Of course. Thanks so much to our listeners, viewers, and subscribers for tuning in. Please be sure to subscribe to our channel on YouTube and give us a like or comment. And you can find us wherever you listen to your podcasts. And as always, you can learn more about ALA at alanet.org. Until next time.